All right, what's up, Matt? Happy
How you doing?
Sunday. Happy Sunday.
Mm,
Hope you're enjoying some good weather. How's weather up in Seattle right now?
surprisingly sunny. Surprisingly sunny.
Yeah, no, it got to like 90 degrees here in Texas today. So, yeah, we got we got our heat going. And it's the South for a reason, right? But
Yeah, seriously.
hey, interesting, right? Interesting set of events here with all the you know war thing going on and whatnot, and here we are just looking at the charts and seeing what levels have been swept. Liquidity logic to the max. You want to
Yep.
cop?
I mean, to think that that's important. That in times like these where it seems like externalities are driving price action, to really just focus that much more on just the charts, because something we talk about quite often is that if you're charting properly, you will see it most of the time on the charts before the headlines start happening. So it's we don't like trading in tough trading environments, but they always make for great teaching environments and great examples, in real time as we go, which then just kind of leads up to what we're building inside the Discord, which is the liquidity logic learning
Oh my God,
module and the private courses. I know.
I'm
So it's exciting to see the success that some of the members are already having.
so excited, man. So excited to start teaching, people that really want to try, people that, are really tired of, coming from personal experience, tired of kind of just bouncing around from Discord to Discord, trying to see what works. Oh, this guy, he draws shapes. Oh, this guy uses unusual flow. And oh, this guy draws shapes and uses unusual flow. And, here we are just, with some simple liquidity logic and you know seeing here we got ES and the SPY charts pulled up, and what do we see? We just swept into
Yeah.
quarter liquidity, right? I swung some SPY
And
calls,
before
maybe a bold
I
move,
mean
but
I mean before we even get into that, like, I just want to touch on something you mentioned. It's like you go from Discord to Discord. We've been in Discord to we've ourselves been in Discord and Discord and Discord. Been left unsatisfied, and you start to wonder, if all these people know what they're doing, how come after I learn what they're doing, they still can't capture the price movements and all this stuff. So it kind of just led to me seeing, well, like, I don't invent levels or market structure. That stuff's there. There's other people that try to claim they invented levels of market structure. That's not me. I just try and identify, what do we actually need on this chart, right? And that's how I just got the liquidity logic levels. Because one, I don't want to think, because thinking leads to overthinking. And two, I just want to be able to react when I see things happen on the chart. So that's how I got there, was just like you just said, being unsatisfied in other discords claiming they had this secret sauce and all this stuff. And I was like, there's got to be a way mathematically to just kind of quantify the liquidity, all the liquidity hunts that we need. And that's kind of how I ended up here.
yeah, man. And I've been actually basically a student of yours and learning liquidity logic, man. And this is the only thing that actually made sense for me from oh well, the bull flag broke down, or it was a invalidated breakout. I was like, well, I'm like, invalidated
Yeah.
breakout, okay. I'm like, what
Even the
in
flags, too. I always
what
have a
in
saying, it's always a bull flag till it ain't.
right, no, 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 but it's like with the invalidated breakouts, I'm like, okay, got it. Unvalidated breakout. What invalidated it? Like they were never able to explain what actually invalidated the breakout. Like what
And that,
caused
it's a
our
great point,
prizes to
because
return.
it's easy to say support resistance, right? But it's a lot harder to define why it's support and resistance.
So it's
And
like,
that's why I steer clear from using those words, because it just becomes a catch-all for people who don't really know how to identify liquidity.
right. So here we are, right? March 22nd. It's a beautiful Sunday.
Yep.
Um, about a week before we launch this liquidity logic program. So
Yep. It's been quite the interesting trading quarter.
anybody that hasn't been, up to date, our Discord right now is free. Feel free to join. If you're seeing this video on X right now, this is probably your cue to, hey, come check us out. Everything's time stamped in ours. We kind of call paths. We we examine flow. We do it, pretty much all, but stay consistent. Come check us out. We've had some pretty good weeks. While I've seen in Twitter, so many people are like, oh, if you're still alive and if your portfolio's still healthy, you're one of the best traders and this and that. And I'm not gonna lie, this has been one of the toughest trading environments that I've been faced with in my trading career. But no different. Let the charts show the move first. We're patient. We're not chasing any candles that are, oh, to the moon. No, we're waiting for liquidity sweeps and then we enter. So uh, just to jump on the charts now, then what do we got for this coming week, Math? I
Yeah.
think Friday I was a little bold. And after this sweep of previous quarter low, we got the sweep on SPA on ES, and we also got the sweep on NQ here. So we just swept some
Yeah.
quarter liquidity. I expect at least a dead cap bounce. Right here, we're showing the 3 month time frame. Right, interesting enough here though. Notice how on ES we did sweep, but we didn't sweep on NQ, so we still do have that
Yeah.
divergence there.
I think we might drive up regardless because I was doing some back checking, not necessarily testing, after this contract switch mess that kind of skewed my thinking a bit. So I was trying to unskewer myself as best I could. So we did have a divergence at the top that lasted until, it lasted through the creation of weekly bearish imbalances and the flush down. So um, it was because I had the contract switch that made it look like the divergence ended before. So we can go down to discount with the divergence at the top intact. We just need those bearish weekly imbalances, in my opinion. And I do think we're going to see a pop before we go down because we have to create, it's going to take like 3 weeks to create a bearish imbalance on the weekly. So
Yeah, and depending on how this month closes, right, we're definitely going to create a monthly volume imbalances here on both ES and NQ, unless it has a really big spring back up to 29 52 that I think I got there. So eh, you know if anything, this bounce that I'm playing here is just another liquidity grab up into sell side to bring us
well,
down.
let's let's break it down even to more of its rudiments. Looking at the quarterly chart, we've got up at the top, we've got a high, low, higher high, lower low, come back up into that bearish breaker, right?
Yep.
And then from there, right, we've been in that quarterly range for months. We just, like you said, tapped it on, I believe it was ES and the Dow YM, but not NQ. We've been inside that range for a few months now. And once it got tagged on one side, even with the divergence, it is a bullish divergence. So perhaps that was the requisite liquidity to go run up the relief rally.
Yep.
I don't want to get ahead of ourselves because we know what's on the next chart, but I don't want to talk about it till we get there.
Yeah, no, and just interesting how the news lines up with these quarterly sweeps. Hey,
Always.
all of a sudden, right? Now there's talk about opening up the Strait of Hormuz again, and possibly some peace and whatnot.
Where did we close on Friday? Right? Look at where we closed inside of just. We just.
Let me
What
go
did we
here
do? We
to this
hunted
one.
down that bullish liquidity, right?
Yep, we closed here, and now we had left this volume imbalance. We're at least going to close this back up, So I at least expect, back up into previous week's low there.
But it was a great real time example of how we tell people that they have to stack, just the liquidity stack to see where the most likely place we're going to hunt down that liquidity, because there's imbalances all over the chart, but where are they stacking up? where is that stack happen to be? Is it in discount? Is it near a level? Is it near a break bumper? Something, right? Always, like you said, there's always a confluence, right? Like somehow the market makers always stay near a liquidity hunt, and then so once the headline hits, like they've either already hunted the liquidity or hunted right after the headline, and they'll spit it back the other way or whatever they do. It's
Yep.
that kind of vibe.
And another thing to notice is like look at all these lows that we swept. We swept lows from November. You know, we
Yep.
basically, so we swept all the lows, right? We're bouncing off of a 24-hour breaker block. We're in quarterly liquidity. We're in monthly liquidity. We're in weekly
And monthly
liquidity.
discount. We also hit monthly
Yep,
discount, which is important.
yep. We're in discount of the range. All these stacked confluences.
Very textbook, to be honest.
Yes, very textbooks. Along now with the quote unquote peace, news from
Yep.
from the president now. So it's like, that's what amazes me is like, Jesus Christ, how are these guys so on point to have
Yeah.
the algorithm sweep at these exact levels and then, at the same time, get some peace going, right? And make the stock market going up. This is insane to me.
It's another great example to what you said, though. It's like when the headlines start driving the narrative in an increased degree, or you see there's just a more higher frequency of headline or whatever it is driving the what do you call it, that fear and greed index kind of thing.
Yep.
It's like the way I look at it is the more people are talking about not charts and not liquidity logic, the more valuable it becomes because people are losing their restraint. They're losing their discipline. I mean, if they were trading, and getting away from that. So while we are adhering to the same thing, a disciplined, balanced, consistent approach, same approach every day, et cetera, looking for those liquidity levels to get hunted down, swept, tagged, reverse back the other way, or just, reject and go further down or bounce and go back up, but regardless of what's happening, it seems that when things start to get a little bit out of control for retail, or we get into these kind of parabolic moves, that the people who are just shutting out the noise and adhering to the liquidity logic, the levels, the imbalances, the draws on liquidity, those people seem to be in good shape. And, you and I are basically the first two to be doing it consistently.
Oh yeah, no, and I love, our Discord as we open things up freely. Some of the members that are really, putting in the time to figure out why, price is moving the way it is. And, whenever I say, hey, why am I taking calls here? El Jefe is one of really good example of a student that applies himself to learn, to try and figure out, hey, why did price reject here? And I kind of tell him all the time, I'm like, we see price rejected here, why we entered into this weekly imbalance here, brought us back down, and why does price bounce here? We're in the lower time frame, we're here in the hourly chart. I had drawn and given this path over to the team, earlier Friday morning. I said, hey, we're going to come down, bounce around there or so, and yeah, I'm off a couple dollars. I ain't no magician, but just kind of telling you, hey, this is where the path is going to go, and same thing with NQ here on the hourly. Look, as soon as we just tap that quarterly liquidity, all those orders, that are there to just get sucked up are there, and what are we doing? We're sweeping up these lows. We do have a low down here in NQ over here in 23.25 that maybe wants to get swept, but I expect it to bounce up and then continue its path down.
Yep. I love hearing people, like there's Ace and Sergio talking about, when they start discovering how PDEQ is like prior day, discounts, basically like the mother of all levels.
It's sometimes that simple, right? Let's look at a couple PDEQs, right? Sometimes that's.
Well, let me just say this before we actually look to the charts, just from a back testing perspective. I noticed on the indices.
Yeah.
I was telling people about this, right? Whether we're in a strong, bull trend or a strong bear trend, it doesn't matter. Almost every day, and if not every other day, and we saw it last week where we ran up like massively, and then we hung out up at the top and came straight down to the EQ, that previous day's EQ. It was like 2 days later instead of the next day. But this is what I've noticed is that even in a bull trend, and we've saw this, right? Like it'll go, price went up a lot and then came back down, went up a lot, kept going back down, lower highs, lower lows, volatile, but a downtrend nonetheless. So we're always going to go every other day, maybe we're going to go back and collect liquidity from that day's equilibrium point or the discount. If it was one of those nice, healthy looking candles, that's the one that's carrying all the liquidity.
Yep. And it's, I learned this from you, this little EQ trick.
Yeah.
Like sometimes it's that
So
simple.
for people who don't know, let me just kind of make it plain. People who don't know, it's the same concept as discount. We just say EQ for ranges of time, so we know it's a time range versus ranges for price, which is we call discount. So that makes sense, right?
Yep.
Okay.
And I'm just drawing
back to you, sir.
I'm just drawing some dotted lines. Can you see my screen, Matt?
Oh yeah.
Okay, so so I'm just drawing here. We have this EQ, right, from this previous Thursday, March. That was March 17th, right? So as you see, that day started closing below it. Then we closed below the PDL. Okay, so you have this next day's EQ. Price never got above it. Started. Closed right below actually the close. So that was bearish indication right there. Just simple candle ranges. Hey, you didn't manage to close above that body, so you're not going to get back into that candle range. So here you are in this other candle range, and as soon as we start, dropping below that EQ, where do we go? We just keep on traveling down, and it's like if you just back test that and just see where EQ on the previous day is, that's going to be as simple as guiding you to where you're going to be headed tomorrow.
Absolutely.
It's sometimes
and I've seen that.
Simple.
I love that strategy. Oh yeah, I love when I see Ace do that strategy where it's just like if we bounce above EQ, we're going for the high draw. If we bounce below it, we're going for the low draw. It's just that's the logic. No thought, no stress, just whatever's in front of me, I'm going to react. See, react, do.
So we have EQ here on the QQQs, right? And I'm gonna step it down. I love looking at the hourly time frame.
Indeed, love it
from EQ perspective because here's that EQ that we talked about, right? So you have that EQ here to the next day, right? You come in, what happens? You reject right there on that EQ. Never managed to get an hourly close above EQ. You kind of got it here in pre-market, but as soon as market open, look, you're closing, you're holding that 8 a.m. low, and look, you're tapping that EQ right there. And then you just start coming down. That 8 a.m. low, my magic yellow lines, I love that. You come down, right? And then, all right, so this is the next day's EQ. You never tap above it. You chop all day. You kind of stay in between this range. I never trade these days. Whenever we're kind of just in this range, it's like just go out. What do I say? There's days you go long. There's days you go short. And then there's days you go fishing. This was a day that you go fishing,
We had, to your point, or we also had, I forget what day it was last week, a price came up and got rejected right at prior quarter and current month EQ, just textbook.
Yeah. Was it the indices?
Yeah, it was I think it was on the NASDAQ on Wednesday. Something like that. Wednesday or Thursday.
Let me see. I got all.
We came up and we just screeched to a halt. I don't think it was the day we missed prior week high. It was the next day or something when we tried to come back up again. Something like that.
Yeah. Well, this was the day. You know what? I didn't go fishing this day, though. I'll tell you that. I didn't go fishing that day. You know why? Because this is the day that I called out. I was like, I saw all this just chop here and kind of just grab of liquidity here that was going on constantly. This is the day that I said, hey, today is the day to kind of turn one of those $100 into $1,000 contracts with SPX.
Yep.
And this is the day that we bottom ticked SPX all the way
and then
up.
It did it.
Yeah, we turned contracts. I think D turned $100 into 1900. You know, so it was
Hell yeah.
yeah, no. So I mean, we're ready. We're always ready for these moves. We're always kind of like on the go, and I'm like, okay, where did
Also,
liquidity
that's the
sweep
thing, right?
now?
We don't know they're going to happen. Like, we're just ready for them if they do.
Yeah, and get this right. Where do we bounce off of? Like, what is that? The EQ, really? Okay, so if you would have just played the EQ play, hey, you closed the hourly above, and now you're there. At you can take your chance and ride
Yeah.
that up easily, easily. Easily.
That's the thing, right? Is like when you say take your chance, we do this because it helps us identify the most high probability setup so we can put ourselves in the best positions for success. And like you hear me say to people, just be a better friend to yourself. We give you, we can't make the horse drink the water. We can lead or try to lead the horse to the river or whatever. But the thing about it is like stop trying to do all the stuff that doesn't work because the stuff that works, you just don't want to actually do it because that would require, being accountable to oneself.
Yeah, no, I mean, and it's simple, right? I had set out these targets on Spy on Friday, and it just kind of hit them. It's liquidity logic. It's not rocket science.
Yeah.
It's not
It's
brain
not,
sur-
it's not rocket science. It's liquidity logic, right? Like it's just that
it's
simple.
yeah, it's not brain surgery. Like guys, it's just hey, look at what levels haven't been swept and what has been swept. So, we did leave this gap. Over here, I do expect us to kind of come and grab this liquidity that was left behind here on Spy. You kind of see it up here too, with NQ. I saw it on NQ too, but yeah, it's gonna be an interesting week nonetheless. Look, we're almost, we're almost, we're almost back up to wherever the hell we were. So
Yeah, no, it's funny how
you
that works, right?
are you still long on NQ? I know you went long as soon
Yeah,
as it
I'm
opened.
going for that magnet for price at I might get out at the prior week close, I suppose it is also. But
Yeah,
I think we're going to go straight up, make a beeline for that magnet at 326.75, 24,326.75.
326.75. Oh, okay, yeah, you're going for this breaker over here, this bearish breaker.
Yeah, yeah. I think
Okay,
if we're gonna. I mean, price again. Like, where does price want to go when these things form? We were talking about in the Discord the other day
Bre-
with
bre-
D and Surge from breaker to breaker, from
breaker to
4 hour
breaker.
draw to 4 hour draw. Yep. Bump it back the other way. That's why I like the break bumper. A breaker block doesn't tell me much, but thinking about it like a bumper, like a bumper pool or a pinball machine or something like that,
Yep,
that makes sense to my brain.
yep. Back to the breaker, back to the bumper.
To the break bumper. It's if anyone has ever seen Succession, go back and watch the Turnhaven episode, and you will see just the brake bumper is an overpriced old fashioned that like white people drink in New England,
The
like
breaker.
unnecessarily overpriced.
That's like the Manhattan.
Well, the Manhattan's like it makes sense. This is like they're making an old fashioned with like ingredients that are way too ritzy to be in an old fashioned. And you know me, I like my premium aged whiskey. This is just like over the top, like beyond over the top.
Yeah. The only thing I don't like about this run up here is that we didn't get a nice 15-minute imbalance jumping out of this quarterly. Having strong imbalances, three candles moving in the same direction always just make the play more confident. But
Yeah, that would be nice if we had one. But, we could still print one.
we could still
That's the good
print
news.
one. But
We do have we got the strong hourly. Let's build the blocks back up. We got the lower low from the open. We came back up and printed an hourly close above. Yeah, I mean, obviously we're way down here from the Bears. I don't think you or I are going to chase, but
no, and
little rally here. Like, let's check it out. 15-minute, nothing yet, but we did get a 15-minute order block off that low. So
we
that's
did.
good.
We have that order block in.
And we have a 5-minute IB, which is not what I'm trading, but it is better than no IB on the 5-minute. So
Yeah,
there you go.
just looking at it here on this hourly, we're at this rejecting at the midpoint of this imbalance, of this volume imbalance left on the hourly here. So just kind of these wicks, every time I see these wicks, it's just it's pushing price down, right? So you have sell side liquidity there that it's absorbing. So bulls really got to step it up in this case to push price back up.
Yep. So far, so good. They're going to have to continue something they haven't been doing a lot of the last week.
Well, let's see if our buddy Trump helps the algo here. From a structure standpoint, the 5 minute looks really good. You have this breaker here, then this imbalance created off the breaker. So as long as you hold this right here, 24.21, you should be good. And just kind of real time. Excuse my freaking my mouse is really slow because of the recording.
Oof.
But this is a nice little example here of kind of like just back to the breaker, right? Look, so price went up, and this is just, you see this in all time frames. Again, we love to examine the higher time frames to make sure that we're capturing the right move. But you see this on all time frames. You created an imbalance, you went up to the breaker. Now you broke up and through. Once you create an imbalance with a breaker in between, price comes down. Technically this can be a good entry. What's your stop loss? My stop loss would be the bottom of this candle here that created this imbalance. And it's simple as this. You trade that. You're risking whatever. Okay, so I'm entering at 24.22, and I'm exiting at probably 23.980. So I'm risking 20 points. But I'm targeting up 300 points. So
Exactly. And that's the thing that everyone needs to remember, is that we don't chase moves, we react to the next move. So if you saw a move that went down, you're like, oh, I was predicting it, but I didn't trade it. Okay, well, you were right. So bank that and then wait for the next move. Why? Because we're looking at higher time frame, because that's where the big liquidity pools rest. That's where the big moves come from. Even though we're trading off the hourly, let's say, we're still looking at those higher time frame charts. So when we know that a level gets tagged like prior quarter, month, week, or day low, and we get back above, that's the market maker telling us. They're not even winking at that point. They are just screaming at us. The risk reward is back to that corresponding high, whether it's the daily, monthly, weekly, quarterly high. That's as simple as that. Liquidity logic. Take out a low, get back above, go for the high. Take out a high, get back below, go for the low.
Oh, Boom. Crap. Oh, look. Something interesting that I just noticed. So on the last session, we didn't tag previous quarter's low on NQ, and we just did at the
open.
We
did it for ES and YM.
Yeah, and we just did it at the open. Wow. Okay.
Yep. So you know what? Hey, October. Get ready for October's high. Prior. Do you remember why? We had a great conversation that I wish we would have recorded, but I'm actually glad we didn't, because of the contract switch mess. I was saying stuff that didn't actually exist, and I'm kind of upset with myself for getting the contract a little bit flubbed. However, the one thing that remains, since the structure is, pretty much the same, is that there is, we talk about this a lot. Like, while yes, we're totally expecting that washout to last year's annual, prior year EQ, and whatever the highest time frame discount is that we have, we need a smaller, lower time frame permission structure. In this case, our weekly is our lower time frame, but that's, people listening, that's not lower. It's just lower than the quarter. So we're going to need some kind of permission structure to go lower. And what helps us go lower? Taking out a high, right? And so while people are thinking like, oh, this is a bullish move, you and I are sitting here thinking, let's manipulate that high, trap retail up there, trap professionals who don't know what's up either, create a nice bear wick, get that rejection liquidity, and then shimmy on down to discount.
Yeah. No, this is going to run. This is definitely going to run. And you know why? Because this is why always, analyzing both indexes is good.
Yeah.
ES, look, on ES, we got our nice 15-minute imbalance. The hourly structure, I always like having this hourly structure. Hourly structure looks really good. We just closed right above the body of the last candle. So now we're holding that structure. We just put in basically a 1 hour order block as we were talking here.
Yeah. So if we just
nice.
thinking, just thinking or not thinking and using liquidity logic, we got previous quarter low that got. The NASDAQ has not taken out its previous quarter high, which is its October high. So what's the NASDAQ been trying to do for the last like 5 months? Been trying to go back up and get that high. We finally got it. I thought we got the quarter tag. I was wrong. It's a contract mistake. That's my bad. But this is the exact reason why I was firm in my opinion that we weren't going to go down, like fully down to discount yet. We were going to try to manipulate more liquidity higher. I think we finally got there. Like I said, the contract got a little in the way of my thought process. But now that I've smoothed out the charts for my own eyes again, I'm sure you've seen this, quite plainly because you didn't mess up yours like I did. But I see the order block at the top on the HTF, and there's the the high, low, higher high, lower low, back up to make the lower high, and then daddle back down to make that run down to what do we have? Daily breaker, monthly discount, quarterly imbalance, quarterly low.
High, low, higher high, lower low. See ya.
Exactly.
And look, right, as we were talking about, right, we explained on all the time frames how you saw this. This is a perfect, whoever could have been on the live with us. Look, you entered at 24.22 and you're already at 24.75, so you got what, 50-point move here within here, let's see, 20 minutes. 50-point move on NQ in 20 minutes. Come on.
And I don't think it's out of bounds to say we're probably going to grind up about like 225, 250 points, like on a first move.
Oh,
now that we've got that close.
Yeah, at least I think 24.202 to kind of just close up that gap left behind.
Yeah,
I think it's good. And then our bearish breaker, just where's your bearish breaker? You already passed your first bearish breaker. Your next bearish breaker is going to be over here. 24.166. 24.166 here.
Yeah, and then 24.326 I think was the.
Yeah, and then I have 24. 26 over here. So I just got to bring it
something
down.
like that.
But yeah, and it's that simple. It's that simple. Do you have to think? I mean, I know everybody wants to make quick money, millionaire tomorrow. Yeah, but reality is just it doesn't happen that way. But I guarantee you one thing: if you put the time in and you work and you identify structures and patterns, then yes, eventually you will be a millionaire because you're going to be disciplined enough to follow your own rules. And that's what it really comes down to. Can you be disciplined enough to maintain a balanced checkbook? Can you be disciplined enough to maintain your health in good order? Can you be disciplined enough to not be lazy? Can you be disciplined enough to not take as many gambles and just let the chart govern your decision making?
I look at it this way, right? People, we talk about this a lot, right? People will complain about whatever's going on in their not trading life, and then when they make more money in trading in like 5 minutes, they won't book the profit, and it's not good enough for them or whatever. To that, I just say you got to adopt this mindset that it's a race. I mean, it's a race. It's a marathon and not a sprint.
Yep.
Because if you can, I mean, look, give or take, there's like 250 trading days in a trading year. And if you can make 1,000, especially if you're using one of these prop firms or whatever, and you're really disciplined, like you do an entry and you take like, let's say just doing like, just an example, 2 mini cons, which are the regular ones. The micros are the smaller ones. I don't know why they call the regular ones minis, but that's not my department. You can take profit at like 30 points and on one con and profit at like 50 or 60 points on the other. And you will, that like right there is making over $1,000 per trade without trying to like go for the gusto. Like obviously you can use micros. You don't need to have that much risk, but I'm just illustrating that if you can just simplify, making, and you don't have to make the 1,001 trade. You can use 5 micros to build up a half a contract and scale out, whatever you're comfortable doing. But the minute you let the ego rule the realm instead of just what's in front of you and managing your position, managing risk, managing money, and keeping profits being booked, up the ladder, you can't really get hurt. So we talk about this a lot. You're going to hear me talk about this a lot in the Discord when we're teaching. It's like, a great trader with no money management skills will go broke and be in debt, but a 70 percentile trader skill set with great money management skills will always be able to pay their bills and have some left over.
Yeah, no, absolutely. And that's what I tell people. You have to build. It's I'd rather have a drop of water fill my glass every day than a couple of like fast fill ups every week or so. So I'm all for the
Hmm.
drop of water. I tell people here every day, right, in Discord, $80 a day is a 20K amount, a 20K account a year. So you can build your
Yep.
portfolio to $20,000 a year if you just try and look for $80. And what's $80? You'll get $80 in a play of SPY, risking probably $100. And if it goes south, then you can cut and lose 50, and then probably make that 80 back tomorrow. But it's easy once you set yourself up with the mindset that you're gonna win because you're putting in the work. You're not gonna win.
Exactly.
You're not gonna win because you want to win and you want to become rich. No, that doesn't work like that. You're gonna win because you're
No,
putting in the work, and you're really applying yourself. So
well, we always tell people, you know, it's not difficult, right? But if you can just put in a little bit of effort, you'll start to see things very differently. And then it'll create consistent habits that are good for trading as opposed to not good for trading. And you'll be prepared. You won't be as stressed out, et cetera, et cetera. So it's really just about in all things like self-care because it's a stressful business.
yep. And I'm looking here at ES. Look at the daily. You can get up here to 25.84 easily. 65.84
Yeah. Oh yeah.
easily.
Some
That's going to be
something
your
else that we
first.
tell people. Um, wow, I just blank. Hang on. Let me take it again.
Just
Tell people something else.
what
Ah,
what do you think the forward look for the week ahead? Do you think we
wait, hang on a
chop? Do you
sec.
think we make a
Hang
run?
on a sec. Hang on a
Yep.
sec. I got to regather my thought process. I derailed to a second. Hang on a second.
Hmm.
Oh, sorry. Okay. Sorry. Um, yeah, and it's something that we say repeatedly, inside the Discord too. To your point that if you let trading be about win rate and money, you're going to be distracted by it. If you let it be a byproduct of just good charting and executing based on that chart and letting the money be a byproduct, that's when you're going to start to be successful. And it's easier said than done. Everyone goes through that journey, but you know, you have to get to that point where you're more um you're more married to the trade than the money
Absolutely.
for the trading, I should say.
Absolutely. Where do you think we're headed here for the following week?
Well, just from a liquidity logic kind of basic 101 perspective, we took out prior quarter low on the Nasdaq. So I'm thinking that from that higher time frame perspective, we've got to go up to prior quarter EQ at at least. But then we got to zoom in and say, okay, now what's going on for the monthly? Um, it's been difficult to get back up above the current month EQ, so I'd be looking for that. And then in a more immediate sense, we took out prior week low, puts prior week high on deck, which is pretty high up, but it also correlates with a high that we failed to sweep, which I think is now the two prior week high. It's like around 25,217 for the NASDAQ.
Yeah,
Um,
prior EQ is
so
25,134. So that's a big jump if we actually make that
prior quarter.
yeah, prior quarter EQ.
Yeah.
Um
Well, I mean, if we're looking at the range and like where we would have to come up, to discount this waterfall, if we were going to then move back down. before we get the takeout highs. If we're going to take out, not going to take out highs or whatever. So I don't necessarily think we're getting a move down. This week we don't have the ingredients on the charts yet for it. So, and I mean, look, we're going to have probably confluence of events that add some extra volatility into the mix, like they have.
Yeah.
Last couple of weeks, so I can't, speak to like if in an hour from now, hey, the entire Strait of Hormuz is on fire or something. That I can't necessarily, defend against. But after this, we talked about at the outset, looking at the charts, looking at what happened, we see price go on its bearish path and collect liquidity where it needs to turn around and go higher. Whether it, it's not going to go back to all-time highs this week, whether or not it actually for the QQQ and for NASDAQ futures, whether it actually gets up there remains to be seen. I'd like to think that we can get up there and take out that high before we go back down, but it is not required. We just have to see how things play out. This is where I'm interested to see what the charts can paint now going forward. Are we going to get a new, hourly, 2 hour, 4 hour, 8 hour order block? And if we get a confluence of lower time frame order blocks building on top of each other, kind of like the Russian dolls or whatever, that's a pretty good sign that we're gathering some bullish energy. Obviously, the bulls have to oblige with price, make a higher high, discount it, make another higher high, etc. But that's why we stress keeping things in front and reacting instead of constantly trying to just make bold predictions for the sake of making bold predictions.
Yeah.
If you can't justify it with a liquidity path, as we do with our charts and arrows and explanations, then it's just kind of like the golfer like throwing the grass up in the air and just being like, whichever way it goes. So we stress the importance of charting because it's integral in trading with a plan. And if you're not trading with a plan, then this gets back to like, why are you in the Discord? What are you doing? Are you here to learn? Or are you here to just kind of hopium and try to copy? But it's kind of like, if you don't know what you're looking at, and we see people make mistakes, in not just in trading, but in life. And we kind of ask, why would you go into battle without, armor or munitions? It's kind of like trading without a plan.
Yeah.
Maybe because it doesn't seem real because it's on a screen or something, but it's your money and you're throwing it away for what reasons? I don't know.
Yeah, no, and I'm just looking here at the weekly. Weekly looks pretty nasty on the NASDAQ.
Very nasty.
It looks very nasty.
The thing about
huge
that, though,
selling pressure
here. So this is an interesting thing, right? I was looking at this. I was thinking about this. The weekly looks really gnarly, and this is kind of what we talk about all the time. Is if you look at the monthly and smooth out the volatility and just look at the actual structure and the price movements, it looks much more palatable, right?
Let me switch over to the monthly. Monthly looks more approachable. Yes. The weekly looks nasty.
Weekly looks gnarly. The daily is just a mess. And this is, this is we've been range bound for like since October.
Let's get back above previous month low, and I could be confident that we might go chase that high up there.
Oh yeah.
But
I mean, we definitely do.
But until then, and that's the thing with us. Like, I'm not married to being long, and I'm not married to being short. I'm just playing whatever the chart is telling me.
Yeah, and that's the other funny thing too. Is like our bias is for trading is a very trade specific bias.
Yeah, I mean, I am more of a bull than a bear.
Everyone should always be more of a bull than a bear. People who are always more bears than bulls are just mathematically incorrect.
Yeah.
Like it's kind of funny. Like I'll show you a chart and there's no lower low on the market. There's just a higher low and discount and a run for new highs. So yeah, we always stress like it doesn't mean don't be bearish, don't take shorts. It just means understand when is the right time and what trades are high probability. Sometimes it's wrong to be long. I mean, high probability is sometimes going down. But as long as people understand where they're at in all their time frames, all their ranges, time ranges, price ranges, whether we're in premium or discount, and they'll know how to manage and what to look for. And that's what we stress, right? The whole thing is to create your discipline, structure, and plan without you even realizing you're doing it. That's again, like just to stress, like why I was coming up with this stuff was I don't want to have to think. I just want to have to do stuff and keep repeating the process, which is what traders, in my opinion, should be doing, is not and just doing the thing that works over and over again. The
I
problem is finding the thing that works because everyone claims they have the thing that works.
Yeah, everybody has the magic sauce, right?
Right.
But liquidity's been along for ages, so it's not nothing that we're inventing. We're just kind of
Precisely.
we're just kind of following the system. We figured out how to get in the matrix, and we're in it, and we're trying to
Um,
tell everybody else where the white rabbit
yeah,
is.
we're at the end where we're seeing everything in binary, like
Yep.
at the end of when Keanu's like, and now we're just showing everyone else that path. And it's cool to see, I always had this theory that people who were kind of new to the game and hadn't had a chance to have other people drill bad habits into their head,
Yeah.
they're doing much better, much faster because they don't have to unlearn stuff. And that's really cool to see. And how we know that, this is a feasible, functional, viable thing because we're just looking at liquidity, right? Like you said, we didn't invent it. We didn't create the levels. We weren't the first people to say, hey, there's a high and a low and a midpoint. We're simply saying, well, if we're looking at this and you say it's relevant, then we should also look at that and just extrapolating it to its next logical conclusion. And that's just how I landed with some of these levels. And it was just like, let's keep it simple, right? Like at its core, we need to tap into liquidity. So before we even get to imbalances, like we have to create liquidity at those levels. And somehow those levels always coincide with imbalances and et cetera, et cetera. So once that started becoming more and more apparent, and the repetition of like we talked about previous day high, previous day EQ, just over and over again, day in, day out. It's hard to ignore once you start to see it.
Yeah. I agree. I agree 100%. But
Even on a lower time frame, man. I mean, how we use that 8 a.m. and 9 a.m. candle, it's just rock steady.
it's freaking. I mean, like you see it here. Anytime you bounce under it, you recheck, expect it to go down, and it goes and rechecks into other 8 a.m. candles, which is freaking
Yep.
astonishing. So it's like, look, right, where are we coming back into this range here back on Tuesday?
The algo never forgets.
It does not, man.
It might miss and come back and do cleanup later, but it doesn't forget.
It doesn't forget and it doesn't forgive. So make sure you're on the right
Oh,
side.
hell no.
It does
Yeah.
not care if you're in its way. It will gobble you up.
Mm-hmm.
But yeah, man. But that's all I got for these guys this week. Really excited. I think for our future videos, we're gonna start doing some more concise. Maybe a little bit shorter. Just maybe pick 2 or 3 stocks that we like for the upcoming week, and give those to our viewers that are going to be watching us. So yeah, make sure you
Absolutely.
guys subscribe here to the Money Team on X, and set alerts for whenever these videos come out. We're going to be giving out a bunch of free information, so you guys just start getting familiar with liquidity logic.
Amen, brother.
All right. Well, hey, thank you for your time, Math. Let's
Thank you.
let's make this week a banger, just like all the other weeks with the Money Team.
Yeah, man, we're closing this quarter out with a bang, just like we closed out every other week so far this quarter.
Oh man, yeah, no, my portfolio definitely reflects it.
That's what I like to hear. All right, well,
But
I will see you on the trading floor, my good man.
all right, brother, you take it easy. Bye bye.
Me too.